Presented below is an amortization schedule related to Spangler Company's 5-year, $100,000 bond with a 7% interest rate and a 5% yield, purchased on December 31st, 2018 for $108,660. Here's our amortization schedule. Below it, the following schedule presents a comparison of the amortized cost and the fair value of the bonds at year end. Amortized cost, fair value. When we find the difference, that would be our adjustment. A. Prepare the journal entry to record the purchase of the bonds. On December 31st, 2018, assuming the bonds are classified as held to maturity securities. So we had a cash outlay of $108,660. That's a credit to cash. And in return, we got a debt investment bonds. So we're going to debit debt investments for $108,660. We're going to credit cash for that same amount. B. Prepare the journal entries related to the held to maturity bonds for 2019. In 2019, we received $7,000 cash. It's an increase to cash. We had $5,433 in interest accretion, which is an increase to interest revenue. And the carrying amount of the bonds decreased by $1,567, which is a decrease to our debt investment asset. So here's the entry. Make it debit for cash, 7K, credit interest revenue, 5433, debit debt investments for 1567. Now these are held to maturity, so there is no fair value adjustment at the end of the period. C. Prepare the journal entries related to the held to maturity bonds for 2021. We received 7,000 cash. That's an increase to cash. Interest revenue increased by 5,272, and the carrying amount of the debt investment decreased by 1,728. So our first entry is going to be a debit to cash, credit to interest revenue, and a debit to debt, credit to debt investments. D. Prepare the journal entries to record the purchase of the bonds, assuming that they are classified for available for sale securities. The available for sale makes a difference, but here we're just recording the purchase of the bonds. So again, we spent $108,660. In return, we got $108,660 in debt investment. So we will debit debt investment and credit cash for the amount paid. E. Prepare the journal entries related to the available for sale bonds for 2019. In 2019, we received $7,000 in cash. It's an increase in cash. We had an increase in interest revenue of 5,433, and the difference in the carrying amount of the bonds is 1,567, which will be a decrease to debt investment for 1,567. Now, because these are available for sale bonds, we have to have a fair value adjustment at the end of the period. Here's our fair value adjustment table that we will use for that calculation. As of December 31st, 2019, our amortized cost was $107,093, and the fair value was $106,500. The change is $593 as a decrease in the debt investment, which would be recorded as a unrealized holding gain or loss. And because these are available for sale, it will go into the equity account. So we're going to have the entry of fair value adjustment entry of a debit to unrealized holding gain or loss equity and a credit to fair value adjustment. Prepare the journal entries related to the available for sale bonds for 2021. This is for part F. We received 7,000 cash. Interest revenue increased by 5,272, and carrying amount of bonds decreased by 1,728. So we're going to debit cash, we're going to credit interest revenue, and we're going to credit debt investment. Debit cash 7,000, and then these would be your credit entries. Now, because we're valuing these as available for sale bonds, we need to have a fair value adjustment at the end of the period. So I copied over this amortization schedule into this Excel worksheet, and for 2019, take the amortized cost minus the fair value, and that's how we came up with this entry above as the debit debt investment account decreased. The debt investment unrealized holding gain a loss with a credit balance. We don't realize that exactly, so we have a credit balance of 593 in the fair value adjustment account. For 2020, our carrying value was 105,447, and the fair value was 107,500. So at the end of the period, we need to have our fair value adjustment account to have a debit balance of 2,053. In order to do that, to go from a credit balance of 593 to a debit balance of 2,053, we need to debit fair value adjustment in 2020 for 2,646. In 2021, the carrying value was 103,719. The fair value was 105,650. There's a difference in 1931. So at the end of 2021, we need to have a balance of 1931. At the end of 2022, we had a balance of 2053. In order to decrease our debit to 1931, we need to credit fair value adjustment account for 122, which will be our journal entry, and to balance the equation, we need to have a loss, unrealized holding gain or loss to the equity account, because this is an available for sale bond in the amount of 122. I got these Excel, and that's all the entries you need to make for this question. I got this Excel worksheet from Wiley. If you just go to Canvas, Wiley Course Resources, Chapter 17, Excel Working Papers, click this, it'll download, you open it up, and there are all of these practice problems, practice templates for you to solve your problems, which is pretty cool actually. I would say with this problem that we have just done together, the most challenging part for me was the fair value adjustment, kind of carrying that forward from year to year. I think it's easiest to have a couple tables you can look at here. I did a T table, and then I did a amortize. Um, I just did another table for the difference between the amortized cost and the fair value. They also have a little helper here, but a little template here, but it wasn't super helpful, I thought. And I also had to end up changing this one because it was like a default template. Um, so I adjusted it to make it everything fit better. All right, I hope you now have an easier time with your homework assignment, and I hope this has helped you, and good luck on the rest of the course.